Hi and welcome to the Market Alert for Thursday, 26th of May 2022. So stocks soar after dismal macro data, hawkish Fed minutes. So amazing, the economy is going to rats, but and the Fed are increasing rates. But as it says here, no new news is good news for stocks from the Fed. So, we all know that they're going to continue to raise rates until they can't. So that was bullish for the stock market yesterday, despite the fact that natural gas tops $9, hits 2008 high as EU convergence accelerates. Convergence higher to European prices accelerating for democracy. And the air is coming out of the housing bubble, more bad macroeconomics. What the Fed giveth, the Fed taketh away to right. And this was an interesting one yesterday. UK braces for internet blackouts due to the coming wave of bankruptcies. And this is obviously those gas companies that offer internet access as well, is what it's alluding to. So the government already, in conjunction with BT, are looking to find a way to make sure that any of the gas companies that do go pear-shaped will be able to soak up those that have offered the internet access to its customers. So never thought about that one. So that's an interesting one as well. Other news today, well, it's European holidays today for the French and the German. So keep that in mind. And prelim GDP is the one today, quarter on quarter, not year on year, minus 1.3, minus 1.4 last month. That's at 130. See what that comes out as at 130, and gold silver ratio continues in a bit of a sideways range there at 84.78 ish. So let's have a look at the Dow. So yesterday, as the headline stated there, that the markets moved to the upside, the Dow did also, trading up to the 78% retracement and the 20-bar moving average, but struggling with this overnight because the news is out now, isn't it? So let's have a look at a bit more detail in the 30 minutes, and there you can see the Fed's announcement. The market dropped 100 points to start with and then rallied all the way through to the R1, creating a new high for today. We can see that overnight the market's retraced 89% of this. It's overbought there and is making its way back to the DP. It's a case of whether the market has got the strength or the excuse, more so than anything, to move back to the upside, and any excuse is going to come in the form of the quarter-on-quarter GDP numbers at 130. But at the moment, the DP holding this market on the overnight may have a bit of a move to the downside, but then I suspect we're going back to the upside once more towards the 89% retracement. Failing that, we'll get a bit of a retracement on the downside to these sorts of levels. So you've got both there, depending on what the market does. Note that the market has the 5-bar moving average in between these as well, which will be interesting to see if the market can hold at. In the German DAX, we can see already in the daily chart that the market's also following the Dow yesterday, but that 50-bar moving average giving the market some grief here, and prices moving to the downside there on the overnight, already having taken out the 5-bar moving average. It's a holiday day today for the German market, so again we'll see where prices will go, likely to be dictated by the US futures. In the 30-minute chart, similar picture there. You can see the Fed announcement there. We'd already moved up yesterday. I never stopped moving from yesterday's low. You've got demand, you've got the crossover, as you can see there, and the market just continued to move up. Came back below the DP, the 200 MA, but found support at the 50 and then carried on with the Dow. But overnight prices have pulled back below the DP, but found support, gone up to 89 and now sitting on it. And this is going to be very important because if it breaks this, we could see a bit of a move to the downside and to yesterday's low. However, like I say, that GDP number at 130 is going to be the deciding factor for today's move. If it's going to be on the upside, without a doubt, it's going to have to come out better than forecast for them to use that in order to move prices to the upside. In the 5 minutes, you can see that the market has gapped up, and this is as your 89, the bigger picture 89, and inside of that you've got an 89 and the market coming down there. But yesterday, you'll see the market's reaction to the Fed there, just straight up following the Dow after it fell 100 points and then recovered. Yesterday morning, the market coming down and testing that low before then finding support and then continuing to move to the upside, which is what we saw. Obviously, this is inside of what we saw in the 30-minute. Big move to the upside there. The market then overnight, like I say, continuing to trade sideways. And in fact, this is the Fed move. I thought it was a bit odd when I was talking about that there. That's when the Dow opened. Sorry about that. I thought it was odd because I know there was a spike down. There we go. So there's the spike down. The Dow dropping 100 points at that time and then recovering. So yeah, just there we go. That was the bit I was after, that bit there. Obviously not awake yet. So there we go. So that's that point there where the Dow spiked lower, the DAX followed, and the markets are moving up and then becoming overbought, crossover, and then switching to red as the markets come back. And then obviously we've already covered the gap and where we're currently at, which you can see how the DP is very important and the market holding at this level at the moment. The close and this BRN, should there be a rally off this, will be important too, but that's going to be at 7 a.m. Let's have a look at the JPY. JPY still sideways really in the daily chart, so you can see that bit of resistance still at the 20 bar moving average and at this 78% retracement. In the 30-minute chart, we had the move to the upside, which was oversold. We got the crossover and then the buying coming into the market. We switched to green and the market moves up, and on the overnight on the Asian market moved up also to more or less the previous day's high there, which you can see, and then has pulled back as prices have drifted lower. The 50 bar moving average, the 200 MA and the DP will be crucial on this side for this market to hold. Meanwhile, in the pound, it's still stuck in this sideways range, and it's going to be dependent on what the dollar does, of course, but at the moment to close back below the 5 bar moving average, we'll see a retracement come into this market. So just draw some fibs on the downside. 38% retracement is the 20 bar moving average there as well. And finally, in the metals, and in silver, managing to move back to the upside again yesterday, but it's really looking weak overnight. Close below this green line, we'll see that retracement take place. It's coming. You can just feel it. So it's just a matter of it's been holding sideways, but then it's going to make its way back down, probably to 2050 would be my guess is where it's going to come back to, and even a retest of this low. You can see it's starting to get weaker. The last 2 days, the high hasn't been taken out, and the market is starting to drift lower. Let's just have a look at the 30-minute chart. You see already it's getting hammered to the downside, and yesterday's low is already in the crosshairs there. Previous day's highs as well, so you can see it's making those lower highs and looking weaker as each successive day's trading comes along. So yeah, I'm still bearish on this in the short term. Should be sitting at $150, but you know it's not, and you can see it's going to be manipulated down again. And the same with gold as well. They just don't want it moving to the upside. So let's just throw in some retracements on gold as well. There's a full set there. $17.95, $1,800 for gold again is likely to be retested. The dollar sideways as well, and of course with the comments coming from the Fed about further rate increases, this is bullish for the dollar, which will be bearish for for Bitcoin, gold and silver. Crude oil continuing with that ascending triangle formation, looking like it wants to break out to the upside there, and we'll see if it does. But at the moment, I think it's stuck at about 78% retracement, isn't it? Let's just draw that in. Yeah, 78 from there, projected back from that high there. So 78% is where the oil market is currently trading at and stuck at. Okay, that's it for this one. If there is anything else to report, I'll let you know. But it's going to be an interesting day as both the French and German markets are closed. It's bank holiday for them. But like I say, keep an eye on those GDP numbers at 1:30. Okay, that's it for me. As ever, thanks for watching. See you in the next.